What's up, guys? It's Rob here, and there has never been a scarier time in my entire time investing to be in the markets. People are literally running for the hills, selling their investments for whatever they can, and all the while, we're actually deep in a recession, and that's just come out recently, okay? We just found out recently that we've experienced 2 quarters of consecutive GDP decline, and the popular definition of a recession is that when you experience 2 consecutive quarters of GDP decline, you're in a recession. Meanwhile, the White House has actually been saying that we're not in recession. They've been saying that the definition isn't 2 consecutive quarters of GDP decline. They essentially want to change it to something a lot more complex and something that we couldn't actually look at so easily and figure out for ourselves when we're in recession, because that's the last thing they want. They don't want us to be in recession. They're worried about the November midterm elections that are coming up. But regardless, we're in a very dark period for the stock market, and many traders have been wiped out entirely. I myself have experienced some significant losses, and most retail traders have actually lost all of the gains they made during the stock market boom we experienced after the pandemic. This is the biggest losing year for the S&P 500 since the Great Recession in 2008, and yet there's even more uncertainty regarding the future of the stock market, because the biggest enemy to the market has been the Federal Reserve raising interest rates and pushing stock after stock off of a cliff. This has gotten almost out of control in their fight against inflation, which is very high at the moment, but has potential to decline if they continue fighting it as strongly as they have been, because the Federal Reserve is forecasting rates as high as 4.6% before they even start to slow down their rate hikes. And that's a somewhat optimistic scenario, as some of their members say rates may even need to go up higher than that. And lately, it seems like no matter what you do, unless you're flat out shorting the market, you're losing money day after day. Your account is getting closer and closer to zero. But that hasn't stopped many retail traders from continuing to plow into the market and buy the dip. In fact, retail has been the only group doing this. Hedge funds and institutions have been net sellers of stocks over the past 6 months, while retail has been buying these assets for cheaper and cheaper, which in my opinion, my non-financial advice opinion, is the right thing to do. I think that retail has learned some lessons from history and has realized that even though there are significant periods of sustained downturns in the stock market, over the long run, stocks tend to improve in value. And retail is able to capitalize on that because they aren't bound by quarterly earnings calls where they need to report the highest numbers possible. They don't have millionaire or billionaire investors giving them money that they're investing for. They're investing their own money, and they can risk it how they see fit. And it tends to be the case that retail traders are a little bit less risk averse than institutions and hedge funds who have been selling stocks. Meanwhile, retail's been able to buy the dip, which in my non-financial advice opinion, I think is the right thing to do. That's what I've been engaging in. I think that stocks are at pretty good valuations at this point. We've seen stocks get decimated, especially more risky stocks. And it's not that you guys have to follow me. I'm not recommending you guys do anything with your money. I'm just letting you guys know what I'm doing in the market and sharing some of the data that I've found. So if you guys are interested in seeing more of this, feel free to subscribe to the channel. And other than that, guys, I hope you have a great rest of your day. I'll see you in the next one. Bye.